everyone, and welcome to the Small Business Coronavirus Q&A. I'm Anna Jordan and I'll be your host. Today we'll be answering some reader questions around the emergency coronavirus business measures. We'll also be addressing some of the concerns around the upcoming easing of lockdown. With us, we have three expert panelists. Nick Hobden, partner and head of employment at law firm Thomson, Snell and Passmore. Hi, Nick.
Hi there. I'm an employment lawyer by profession, a solicitor in a law firm based in Kent, Tunbridge Wells and Dartford, and I've been advising lots of employers, both large and small, on the coronavirus job retention scheme and furlough.
Next we have Sarah Greenwood, accountant at Accounts Department Online. Hi, Sarah.
I'm an accountant and chartered tax advisor, and I'm based in North Leeds. I trained doing insolvency work, so we used to do business restructuring and turnaround work, and using the sort of general advice I've picked up along the year, I advise small owner-managed businesses and individuals on various aspects of running businesses.
And last up we have Richard Bearman, Managing Director of Startup Loans. Hi, Richard.
I'm Managing Director at the British Business Bank, where I'm it's the government's economic development bank, and where I'm mostly responsible for is the Startups Loans programme, where we support startup and early stage businesses with funding, but also the bank's obviously very involved in the current sort of lending schemes that have been released by the government, and so sort of have considerable involvement in those as well.
Great, okay. Let's crack on. So I'm going to start with some questions around the government grant funding and cash flow. So Sarah, on to you first. So we've had a reader question in. They say that they signed a lease for a takeaway business on the 18th of March. But because of the lockdown, they haven't been able to do refurbishing, and they were wondering if there was any government help available to them.
I'm not sure what level of rates you're paying at the minute. If you're eligible for the small business rates relief, or your rateable value is below £51,000, you won't pay any rates for the next 12 months. Unfortunately, the lease had to be signed before the 11th of March to be able to benefit from that £10,000 grant that's been announced for small businesses eligible for small business rates relief. So you wouldn't be eligible for that, but there are other sort of things available, like the bounce back loan and startup loans, which I'm sure Rick can probably advise on later on in the webinar.
Great. We've also had another reader who's had a bit of trouble with their landlord. They want to move off the premises because they won't be able to continue on the contract that they have. Would they then have to return the £10,000 coronavirus grant that they've received?
The £10,000 grant is just to help you with your business, so you can spend it how you want. As far as I'm aware, there isn't any mechanism to repay that grant. I've done some research into it, and it looks like the £10,000 grant is just available for you to spend as you wish on your business.
I mean, it's a tough time for everyone just now. Perhaps businesses have savings for, say, 1-2 months, but they're really starting to feel it now. So in the time that they're in just now, what kind of cash flow management tips would you give to these small businesses that are struggling at the moment?
I think all small businesses need to have a cash flow forecast. If you haven't got one sorted, I would do that. You can look at it on a weekly, monthly, even daily basis if you want to. I think probably looking at trying to collect cash in. So if you've got some debtors outstanding, if they've been outstanding a long time, perhaps negotiate with them. Say they get 5-10% discount just to get that cash in the bank. Look again at your outgoings. Can some of those be deferred? You could look at taking advantage of the VAT payment deferral till next March. You can look at deferring your payment on account for your personal tax return if you've got that to be paid in July. And just looking at generally at the creditors and negotiating with them if you are struggling, making sure that you're taking advantage of all areas to ease your cash flow, but making sure it's collected in at the same time. Perhaps if you're running a business like a hairdresser or something like that, you could sell vouchers for when you're able to reopen and sell those in advance, so you've got some money coming in the meantime.
Next up, we're going to be talking about government loans, more specifically the coronavirus business interruption loan scheme. So that is over to Richard.
So there's a number of schemes that are on the go at the moment. I think If I just say a few words about startup loan scheme as well, because it's actually quite important that hopefully people are aware that is still operating and still running. And I think at these times, while obviously a lot of focus is on the businesses that are going through difficulties right now, actually there's also a lot of people at home who are thinking about their business or thinking about their future. And actually to know, hopefully, that there's schemes out there, that such as the startup loan scheme, where there is funding available. The question obviously is when someone would launch and the right time to launch and the right time to borrow, but to know that it is there and the scheme is very much open to not only provide funding but also support. So it's important that's still talked about, I think. But the scheme that you mentioned there is been running for a number of weeks now, and effectively that's a scheme where business can approach a whole range of financial organisations, their banks and other financial organisations, and effectively apply for a loan. Now that loan is provided by the bank makes an assessment on the loan, but to try and turn potentially a no into a yes, what the government through the British Business Bank is doing is it's guaranteeing, in this situation, 80% of the loan that the bank or the financial institution is giving, which means hopefully that takes some of the risk away from the organisation, and then therefore they can provide more money than potentially they would in normal circumstances, or they can provide support to businesses that perhaps they wouldn't be able to support. There are a few sort of elements of it that are important to pick up. I think one is that it is still the bank's decision to lend the money, but as I say, the intent, and I think what we're seeing is definitely that guarantee is starting to get the funds out, and it's without doubt sort of working. But the organisation does have to confirm that it is effective, viable business on the way into the crisis. So I think it's fully understood that clearly those businesses are effective right now. But I think what's important is that the bank has to be comfortable that on the way into the crisis, the business was at least sort of viable and the right organisation to lend to. I think also the other element to it is that the government is effectively picking up the first 12 months of interest costs and any fees that would be applied to that loan. So it's trying to make it both sort of as affordable as possible, but also, as I say, to turn some potential no's into yeses.
Tell me a bit more about the viability. How do you go about proving that?
We won't at the British Business Bank be proving that is ultimately down to the bank. And I think it's one of the things that causes some confusion and sometimes some challenges with the scheme is all the different institutions that are involved. And I forget the final numbers. I think one was actually added today, but well over 50 organisations that are now signed up to the scheme. They all have slightly different approaches and slightly different credit policies and credit decision-making processes. So, and even down to the fact that the scheme covers loans, overdrafts, asset finance, invoice finance. Yeah. But some of those organisations will do some of those products and some won't. But to me, it comes down to, on the way into the crisis, is that business fundamentally a viable business? If it's a business that actually wasn't viable on the way in and actually was ultimately a failing business sort of, before the crisis, then it seems appropriate that you'd say, well, it wouldn't be right to be providing funds to that business. But if actually what the business is experiencing is difficulties right now because of the crisis, the cash has dropped through, orders disappeared. If it's something like that, that's not the reason to decline. Absolutely, those are the businesses that this scheme should be supporting. And I just say a couple of words about. So yesterday, as you said, the bounce back loan scheme was launched yesterday. It is clearly very, very early days, so it's difficult to answer specific questions about it. But that is designed for businesses that are looking to borrow less than £50,000. It's much simpler. It's a much simpler process, and the design there is to keep it fast and quick. So that is just a loan. It's very standardised. There's no sort of flexibility in the product, but that is designed to get the money out as quickly as possible, and in the majority of cases within 24 hours on the back of a very standard application form. And in that scheme, there isn't the viability test.
How about applying for these loans when you've got bad credit? Is that going to cause problems?
So it ultimately it will do. So the banks they are doing a credit assessment. They are assessing the business, and it comes back to that point around it is ultimately the bank that's lending the money. They're lending their money, albeit with this guarantee, this government guarantee. And for that scheme, the instructions to the bank is they do need to apply they're effectively their sort of standard type of approach for credit assessment. And so if people have bad credit history, that will clearly be taken into account and be part of the consideration. It doesn't mean they're automatically discounted, but it will be part of the decision-making process. I think the other element to it is that because you've got a lot of different organisations, you've got different organisations that they themselves have different approaches to risk. And I think that then creates another, I think it's actually a strength of the scheme, but sometimes can cause confusion, because that then means there's different people in the scheme that have different interest rates that they'll apply to the lending. And that because those interest rates will reflect their approach to risk. So it's without doubt that certain business may well be able to get funding from one organisation but not for another, but that comes back to the underlying credit appetite and approach that the different organisations are taking.
Thanks, Richard. That was great. Is there anything else you'd like the audience to know? I
think the key thing with the scheme is that I'd say that the banks and the financial institutions, I mean, they are very committed to these schemes, and I appreciate there's been some press and there's been some, particularly in the early days, people worried about the time it's taking to get responses and get the answers. But it's felt like over the last few weeks, every day, the volume of applications being processed has been going up, that the amount of money that's been delivered has been going up. And I think it's just that reassurance that those organisations, they themselves are having to cope with very unusual times and react. But every conversation I've had with any of the sort of the leadership and the people working, they are committed to this and they really are doing their utmost to get the money out wherever they possibly can. And yes, there is a process, there is a credit decision-making process, but they are putting every effort into doing it. And then on the bounce back loans, as I say, it's very, very early days, but yesterday's reported numbers were really very pleasing, and I think, and I hope that is perhaps the final piece in this jigsaw to make sure that the support is getting out there quickly and to the right business at the right time to help them survive and prosper in the months and years to come.
What about if small businesses, some of them have been having quite a struggle getting hold of their bank? What kind of advice would you give to them?
So I think depending on the amount of money that's required, I would definitely explore the bounce back loan facility. It is designed to be fast and quick. It's early days, as I say, but the reported numbers, it's probably better that the reported numbers that are sort of quoted, are 45,000 applications that were processed. I think it's gone at such a pace. We're actually sort of making sure that we're on top of the numbers ourselves, because it's been I think it was such a sort of a good launch yesterday. Not all organisations are signed up to the screen, accredited to it, so there'll be a lot more to come. But for smaller businesses, have a look at that first, because that is, as I say, by design, a fast process.
Thanks for that, Richard. Sarah, do you have anything to add?
Well, it's probably not for me to say because I'm not the expert, but you can convert, if you've applied for a CBILS before you knew about bounce back, you can convert them to bounce back, because that's quite an important thing, because I think the bounce back, you have a full 12 months without even repaying the capital on the loan, I think is correct. So if you've got a business that's applied for £25,000 under CBILS, they're paying it straight away, whereas with the bounce back you get a full 12 months and then you pay it.
That's correct. The loan is very set in its structure, but it's 12 months. Effectively, the government's paying the first 12 months of interest, so it's interest free. It's also capital free for the first 12 months, and then the loan is then repaid back over a 5-year period. Although there's no penalty or early repayment fee if you wanted to pay off earlier, and it's also a fixed rate. So the rate of the loan is 2.5%. So it's a fixed rate loan as well. And you're absolutely right that if a business has started the application form, they can always stop that, and if they're eligible, they can apply for the bounce back loan, and also they can effectively, if they have a existing corona interruption virus loan scheme, they can repay that with a bounce back loan scheme. You can't have both, but you can swap out of one. Although the information we give on that is wherever possible to hold back on that, because the banks are going to focus on new businesses that are in trouble or need support first, but they will be able to effectively swap you out of a CBIL loan and put it into a bounce back loan if eligible.
I think it's a fantastic scheme.
Taken a lot of work, but so far so good. So thank you.
I think it will make a difference to a lot of small businesses. I had a client who was calling me up and he'd been rejected for a Sybil's loan because he only needed 12, but 12,000 is still a lot of money for someone like him to find from nowhere. So it was really, really needed.
Probably important for me to say, and it is a reminder, it is important that even though it's a fast process, it is still a loan. So people need to be aware it's a loan, and ultimately a loan agreement will be completed, and after 12 months repayments will start. But I think it's, as I say, by design, it should be a fast process.
Coming back to the Sybil's loan briefly, do you need a debenture in order to take out one of those loans?
You don't need a debenture, and there's no sort of set standards around debenture. Above £250,000, though, the banks are kind of allowed to have more conversations about security. So again, there was a lot of conversation about personal guarantees. So that equally, in fact, that cannot be taken under £250,000. But the financial organisations, particularly above £250,000, they can start talking about guarantees, and they will talk more about debentures and security and assets that the company might have. But there's no necessity around debenture below 250.
Thank you, Richard. The last area we're going to touch on is things that are coming up that could be happening fairly soon. So Nick, we're going to come to you now. So it was reported this morning that over 6 million employee wages are now being covered by furlough. But campaigners have come up and said, could we have a part furlough scheme? So the way that works would be to have skeleton workers putting back in so that they can do little bits of essential work, say invoicing or payroll, just to get the business ready to go once things start easing off. What do you think about the part furlough amendment, and do you think it could be implemented?
Not being able to part furlough staff, which is to bring them back on a part-time basis, has been one of the biggest challenges and the biggest criticisms of the furlough scheme, and indeed the the coronavirus job retention scheme, which the government says is all about saving jobs. So I think a part furlough scheme is a good thing. It avoids the cliff edge decision about whether to reinstate your employee in full to their full-time or part-time role, or redundancy. And so for businesses which are struggling to bring factories and businesses back to full capacity, it is a challenge not being able to part furlough. So a more flexible scheme, I think, is to be welcomed. And I'm pleased to hear that the government are actively considering this, having been lobbied by several employers' organisations. And so it's considered to be one of the alternatives, if not the alternative, to perhaps extending the CJRS scheme beyond the 30th of June. But the government are being cautious. I mean, it's costing them £40 billion between the 1st of March and the 30th of June. And it could well cost 100 billion. So that's something that's they're having to think very carefully about.
What are the key issues with bringing in a part furlough scheme?
The key issues really are around activity levels, the amount of pay. It's not just a question of a pro-ratering pay system. It's about what value that the employer is deriving from having that person coming in or working from home part of the time.
Right.
So that's really the main one.
Okay. And so say an employer is very much struggling with cash flow, and they have to make a decision as to whether to bring furloughed employees back. They have other options if they can't afford to bring them back full time. So how do they go about making that decision, and how do they then approach employees about having this conversation about what's going to happen with their contract next?
Well, most employers are really looking to see what happens this Sunday when the Prime Minister announces what's going to happen as far as lockdown is concerned, and how the government are going to plan for social distancing, because it will still be needed, well into the rest of this month and June and so on, to stop a resurgence of the virus. So it's a question of to what extent businesses are going to be allowed back, which businesses are going to be allowed back, and to what extent they're going to be able to come back to full capacity. We've seen already in the news that some businesses, large businesses like British Airways and Ryanair, have been in discussions about redundancies, because they see that in future there will be less demand for travel. Because people would prefer to stay home, either continued lockdown or social distancing, and being careful about what they do. So it's very much up in the air at the moment. My view is that some businesses will decide to take measures before the CJRS scheme ends. And those decisions will very much depend upon their access to funding and their cash flow.
Yeah.
The likelihood is that some employers will think about redundancies, because it's simply a question of capacity. If they've got overcapacity and low activity, then they won't want to bring everybody back. So after the end of June, assuming that CJRS is not extended, then they will have to decide what they need to do with some of their staff. And those could be some very serious, unpleasant decisions and some unpleasant messages that have to be given. But there are alternatives, and the alternatives range from holiday and sabbatical or unpaid leave, short time working, pay reductions, reduction in benefits, pay freezes, elimination of bonuses, measures that can keep the workforce going and employed rather than face redundancy. Because as Sarah will probably echo, any redundancy process will cost money, because there's the immediate cash that you have to find to pay people their notice, and also their statutory or company redundancy pay entitlements.
There is still funding available from the redundancy payment service. So if you've got a business that would become insolvent as a result of the cost of making redundancies, then the redundancy payment service offers a loan, a funding to cover that. It's not been very well publicised. It was something that was brought in at the beginning of the last recession in 2007, I believe, to cover people in this situation. And I did check last week for a client of mine, and it is still available. So if you need that money, definitely make sure and take opportunity and take advantage of it, the scheme, really.
Yeah, so Sarah raises a very good point there, because clearly if work has dried up and your customer base is much reduced, and the prospect of bringing any of your employees back is going to be tough because you haven't got the cash, then you may actually be having to look at potentially closing the business and then pointing your staff to the redundancy payments office for their entitlements.
You mentioned just there, we've got the speech from the Prime Minister next Sunday, and we've already had draft rules that have been brought in of how the UK workforces can start to bring employees back in once lockdown starts to ease. As an employer, what are the essentials that you need to know when bringing your employees back in?
Well, the essentials are to read as much as you can. There's a lot of guidance out there, not only the draft rules that you've talked about, Anna, but also the Chartered Institute for Personnel and Development have also produced a 13-page guide on bringing staff back to work. And I say staff back to work, it could be bringing them back to start to work at home. But ultimately, it's a question of how long is that process going to take, and you will need to plan for it. in business. You'll need to communicate with your staff how you envisage that working out, and who is going to be brought back in the short term, medium term, and long term. Because above all, you will need to safeguard your staff's health and welfare, and that really means doing one almighty health and safety risk assessment. Everybody groans when we talk about health and safety risk assessments, but this one really does count, because the risk of infection, if people don't social distance, will be catastrophic. And potentially blame could be laid at the doors of the employer if they don't put necessary safeguards in to protect staff. So you need to look at all aspects of your business, from how meetings are conducted, where people sit. Are they going to sit face to face towards each other? That is a no-no, unless you're going to erect a perspex screen. It'd be better for them to sit side by side or back to back to ensure that they observe social distancing. Other measures that you'll need to consider is who has access to the kitchen for the purposes of making tea and coffee. How many people are you going to be allowed into the workplace? You might have a cohort system, which is to create small groups of people to work together, and so effectively protect that cohort from other cohorts. You might want to consider, for example, if you have a fleet of vans, whether they're 2- or 3-seater vans, and if they're 3-seaters, you put one in the driver's seat and one down at the other end of the van to maintain social distancing that way. So there's a lot to think about in terms of social distancing. You might want to consider staggered travel to work as well, because that's important for the purposes of making sure that people don't get infected so much as they go into work. So all of those things you want to consider really now, ready for when you start to come back to work.
And I understand that these guidelines are guidelines. They're more advisory rather than legally enforced. So I guess from an employee's perspective, if they feel that their employer is breaching these guidelines or is putting their health at risk, what kind of action could they take?
Well, it's a very good question. Thank you, Anna, because it's something that I had to deal with not so long ago. A healthcare worker who had difficulties with breathing and various other health conditions. He was a very good doctor and could actually conduct his surgeries online and from his home office. But he was sent a text message to come into the accident and emergency department, and he really feared for his life. And so I advised him not to go in and to push back, and he did, because we were able to say that in those circumstances, if he was in imminent fear of his health and safety and was in imminent fear of danger, then he should not be expected to go in to work. He didn't. The story then continues with the death of 2 colleagues, and he was extremely thankful and grateful that he remained at home working and didn't have to go in. So the message here is, health and safety is key. If your employees are not reassured that they cannot come to work without a serious and imminent danger of harm, then you will need to look at that and address that seriously. Because if you're not able to satisfy them that their health and safety and welfare will be looked after, then they can object to coming into work. And if you dismiss them or discipline them, you could find yourself on the receiving end of an employment tribunal claim.
Yeah, that's something you would rather avoid at this point, especially when cash is so tight. Well, that's all from us. Thank you to the panel for being here today. I hope that was helpful to you at home. We have loads of content around the emergency coronavirus business measures from the government. We've got articles on the coronavirus business interruption loan scheme, furlough, and even the micro business bounce back loan for you to have a look over and to get a bit more information. In the meantime, you can also follow us on Facebook at Small Business Experts and follow us on Twitter at Small Business UK, all lowercase. Thank you for watching, and I hope to see you next time.